Hey everybody, Real Estate Ninja here. I hope you are doing great. I am on set of our real estate, how to prepare for the next real estate crash course, putting some new stuff together for that. And since I'm in teaching mode, I saw some news headlines come across. I have a chart I want to share with you, really high tech. These are just live. I'm not editing these like the course, but I want to go over some news articles about housing and real estate and rents. Why is it so important? Well, this is what they are not telling you. They don't put the entire picture together. When you go to the mainstream media and you turn on the news and you're watching news, right now you're seeing that home prices are going up. Oh my gosh, and interest rates are going low. Holy cow, and you're super excited and you're going, that means that home prices are gonna keep going up. That's actually not what it means. This has actually happened before. I'm gonna use this chart that I'm gonna show you. I'm gonna use current news articles to put all of that together. That is why you wanna be the most informed you can, whether buying your next home, your personal home, or buying a ton of rentals and getting ready for a crash, all right? Do me a favor real quick, put down below, type 1 if you are getting ready, you think that home prices are gonna drop no matter what's going on in the news right now in the future, or do you believe that homes are gonna keep going up forever? Type 2 down below. I wanna see what you guys think, all right? So let's start with the first news story, and I think it's very important because it's out of CNBC and it's entitled "Mortgage Demand Slips Despite Another Drop in Interest Rates." Very interesting, right? The last handful of weeks, all we've been seeing is that mortgage rates are dropping and the Fed's going to lower rates, even though they never said they're going to. They said they penciled in 3 rate drops next year. I actually did many videos on that about 5-6 months ago, stating that that was going to happen. They always bluff. They tell you something to try and get a flurry of buying activity in. But this is interesting information because it's actually totally, it's quite to the contrary, for lack of better terms. Mortgage demand fell last week compared with the previous week, despite continued drops in rates. According to the Mortgage Bankers Association's seasonally adjusted index, the average contract interest rate for 30-year fixed rate mortgages with conforming loan balances are $726,000 or less, decreased to 6.83% from 7.07%. with points increasing from 2.6% from 0.59. So points actually increased. That's really interesting. So rates dropped, points increased. They get you somewhere, don't they? That's for loans with a 20% down payment. The group said Wednesday, even with the recent decline, rates are still much higher than they were at the start of the pandemic. No duh, right? And that's what the media, all they want you to know is just rates are going down, rates are going down. This is a nothing burger. This is a nothing burger, right? So it says here, with the positive news about the drop in inflation, type 3 if you think that inflation is actually dropping, type 4 if you think the government's straight up lying to us. It's interesting, throughout recent history, let's say the last 10, 20, or 30 years, we have studied inflation in other countries like Venezuela, Argentina, Turkey, so many others, right? Of course, the famous ones like Weimar, Germany, the Weimar Republic of Germany. Now, it's interesting, when we go to study those, there's a point at which the government starts to lie to you. And we see it through other countries, but you never ever believe that your government would lie to you, right? I mean, who would ever believe that? That's why we got to weed through this total crap going on in our markets right now. Oh, also real quick, I'm throwing in a handful more of the today's links for the 80% off the real estate crash course. That price will be going up exponentially in January. So if you want it, you want to be a part of the real estate crash course, to prepare right now, put actionable steps together right now to prepare for this, so that you can see and understand where we are in the real estate cycle, they're down below. So it says, with all of the positive news about the drop in inflation, the FOMC projections proclaiming a pivot towards rate cuts, the 30-year fixed mortgage rate reached its lowest level since June of 2023, said Mike Frantoni, MBA Senior Advisor and Chief Economist. Well, that's really, I didn't even need a MBA to be able to tell you that still means nothing. You see, in June, we were still seeing sales falling off a cliff, and we are still to this day. And what we're reporting on right now is that mortgage mortgage applications are dropping as well, even with all this supposedly good news. And if people can only look back 6 months and go, oh man, these are the lowest rates in 6 months, and that gets you excited, then you have no idea what's coming in this cycle. And that's what I'm going to share with you in a second, okay? All right. So he says, at least as of last week, borrowers' response to this rate move was rather tepid. Applications to refinance a home loan dropped 2% for the week ending Friday after jumping 19% the week before, according to the MBA. Refinance demand was 18% higher than the same week a year ago, however. Now, you have to realize, now think about how dangerous this is. And this is what most real estate investors aren't thinking about because they're out too busy buying homes, flipping homes, or they're renting these homes to the same type of consumer that we're about to talk about. See, the consumer's tapped. We just saw 40% of all student loan borrowers they missed their first month of payments after a long forbearance period, right, in October. 40% chose not to pay their payment. The consumer is absolutely tapped. We see, as of today, FedEx stock is dropping 10% because they were surprised to see the lack of demand for their services. That's because less people are buying things. You're going to find out all these Black Friday numbers really coming out in Q4 numbers. They're not going to be as rosy as they appear, okay? Now, so let's look back at this. This is very important for people to understand. You have a statistic that came out. Refinance demand was 18% higher than the same week 1 year ago. So let's think about that. 1 year ago, mortgage rates, 30-year fixed rates, were between 4 and 4.5%, I believe, going off of memory. So now you have 18% more refinances happening right now at much higher rates than a year ago. That's scary. What type of person right now is refinancing their home? I can tell you, there are people that are needing to do debt consolidation. That is one little piece of information that you grab, a little nugget, and you go, okay, that's negative for the real estate market, because in the future, if the consumer is weaker and weaker, that's less demand for real estate, which means, and I'm going to share with you some other stories that are going to blow your mind about rents and exploding inventory. Once you start putting those nuggets together, you start to piece together and go, okay, I see what the ninja is talking about. The real estate is in that down cycle now. We're moving down, and it's time to do something about it. But the thing is you only have so much time. It's not like these happen overnight, but getting prepared for this, building up your balance sheet, getting out of debt, getting your credit built up, and then really figuring out the scope. Once you see the opportunities, then you start going, oh, I don't want to just buy 1 or 2 rentals. I want 10 or 20. I want to go big with this. And so that takes time. And, you know, I've been preparing for this one for 12 years now. And to be honest with you, I thank God every day that I have another day to save and get ready for this. Because when this happens, and I'm not a buyer yet, I'm going to be raking it in. And the good news is I'll be doing it in front of you. And the cool thing is, anybody that thinks this is not going to happen, bet against me. Watch what happens. So here we go. Let's dive into the next story. And this is out of California, but you always have to watch California. It's entitled, California Home Sales Dropped to the Lowest in 16 Years. It says, higher borrowing costs contribute to the historic decline. It says, California existing home sales in November have registered the biggest monthly decline in the past year and dropped to the lowest level since the Great Recession, according to a report released Tuesday from the California Association of Realtors. First off, seasonality changes. I teach about this in the real estate crash course. You have to understand the difference in seasonality changes. However, November is not the deepest. The deepest seasonality drops in home prices throughout the year or home sales, they dip between January and February, okay? So November is pretty impressive. I can't wait to see December's data. It says closed escrow sales of existing single-family detached homes in California totaled a seasonally adjusted annualized rate of $223,940 in November, said the report, based on information from more than 90 local real estate associations. Elevated mortgage rates, they cite as the problem. We're not going to go over that. We all know that. But it says November's sales pace was down 7.4% on a monthly basis in October and down 5.8% from a year ago, the report noted. So now you have the sales dropping, right? Well, what happens when sales drop? The prices end up following. Why? Right now, you can go on any town in California on realtor.com and start scrolling, and through the first 2 pages, you're going to probably see between 10 and 15% of them already have price drops. All right? So this is dropping not only in California, but all over the country. All right. Here's another story. It's really important, and then I'm going to get to this chart, which is very important. It says here, actually, no, we're going to dive right into the chart right now. Oh, no, this is a good one. Out of Boston.com, home prices break records in Massachusetts again. So we're going to see the other side, and I'm going to explain this. Sales continued their descent. So just like in California, the number of sales are falling, right? With November recording the fewest single-family properties on market since 2011. The median sale price for single-family homes and condos in Massachusetts broke records in November. News that should come as no surprise as this seller's market steamrolls on. You're probably going, Ninja, why are you doing this? This is completely against your thesis. Stand by. People paid a median sales price of $579,900 or 8.4% more last month for a single-family home than they did in November of 2022, according to the monthly analysts from the Warren Group. It says condos are one of the hottest in there. Condo activity was nearly lockstep with single-family trends in November. Norton says condos, and when they start talking lockstep, they're talking about the number of them sold. All right, I'll tell you why in a second. Condo sales were down by more than 10% on a year-over-year basis, while the median sales price reached all-time highs for the month. However, when looking at condo trends over the last 3 months, there may be a glimmer of hope. It says in South Boston, the median sales price for a condo was $880,000. In November, a whopping 15% increase over the same price. That's actually on the lower end of the spectrum. I want you to realize that. I know it's scary, but condominiums are always the most volatile in all real estate markets. That's during a crash, you can pick them up like candy. It's going to be great. But they are on the lower price. So imagine if you go into a town with condominiums and houses are going to be priced more than a condo. Why? Because you own the land fully and outright. You have a yard. You know, you've got more rights, right? So condos, they're citing, this is what's pushing it up. But you have to realize when you look at these towns, these are the lowest price properties. I know it sounds crazy that $880,000 is one of the lowest priced properties in town. We're talking about Boston, all right? So this is what I want you to understand. Let's go to this chart. This is the median price. Okay, let me explain this first. Okay, we're talking about median price. And we're talking about the end of a bubble. You always have the dumb money running in, all right? You're always running in. They're running in fear of missing out, that the house price is going to keep going up or that the interest rate is going to keep going up. And the problem is they can't keep going up together in lockstep for so much time. This exact phenomenon happened in 2004 when the Federal Reserve was raising rates. They started raising rates in 2003. They finished 2004 at the beginning of 2005. What happens is home prices are already running up by themselves. The Fed starts raising rates, and then they're going up together, and then they cross over, okay? And there's very easy timing points to know when the Fed is going to drop rates. And I'm going to tell you right now, it's not in 2024 unless, and I did a lesson about this, they do something specifically it's politically driven, and you'll know it's politically driven and not economically driven if they give you certain cues. So if to everyone that already owns the course, go check that out, okay? And that's called the Fed Fake Out. So, and I did do a free lesson on it, a mini lesson on it here about, I don't know, 4 weeks ago. All right, so the median home price starts coming up, and it's because there's very few sales, and it's always the lower end of the properties that are bringing it up, bringing it higher. Why? Because at the same time, the lower end properties are going up in price because of the FOMO, because of the dumb money that's running in. The more expensive homes, the multi-million-dollar homes, are dropping in price drastically. I'm seeing it here in California, all over the country. Multi-million-dollar homes are dropping 10, 15, 20% off their original asking price. So what happens is, as that happens, you start to see that median price rise, okay? Most people are completely fooled by that, and they are going to be wrong that there is not going to be a real estate correction this time. That for some reason, for the first time in history, because real estate does correct on average every 7 to 11 years, 7 to 10 years, it goes through a correction phase, whether it be a flattening out and then picks up again based off economic trends, and changes, or you see an actual dip in price. We've got all these gurus out there like Dave Ramsey saying, he's on record multiple times saying that home prices never fell across the country in 2008. They only fell in a couple of cities and only for a few months. That's straight up 100% wrong. National median sale price of the home did drop during that time, and throughout certain cities it was a catastrophic drop, and we're talking like 20-25%. In some places in my area in California, 46% my property dropped from peak to trough, and that took over 3 years to see, or sorry, over 4 years to see from peak to trough that price difference, 2006 to 2010, okay? So a lot of people are wrong. So let's look at this chart, the real technical here. I'm filming the course, we have an editor for that. But this is me right now, okay? This is the median home price chart from the Federal Reserve from the year 2000. And let's start with talking about 2006. Now, what I want you to see is as the rates were rising, I didn't have this on the chart, but the Fed stopped raising rates. And going off of memory here, around 2004, right here, and they stayed steady, and then they started to drop catastrophically in 2006, right? I guess I'm going to switch mics. Sounds like one of my mics is off. Here we go. Thanks. Thank you, AJ. Everyone thank AJ for me. So, okay, so it sounds like right here, this is where the Fed kept rates higher for longer, okay? And then they started to drop completely. Now you see this last blow off top in price. And a lot of you may be thinking, well, yeah, I don't want to miss this action. Well, here's the problem with this. I had a home for sale in 2006, a flip that I bought. And sales were dropping so dramatically, just like what they're doing right now. I went to go flip it. I had about $35,000 I figured in margin that I was gonna make from this flip. When we went to sell it, we couldn't sell it because sales were just falling apart. But at the same time, there was no sales, you saw this price go up. The reason why you saw this price go up was because it's like a stock. You know, a stock's only worth what the last person paid for it, the last closing price. It could be one share, it could be 1,000 shares. That's the price of the stock. Now with stocks, they're buying and selling so rapidly, you never really see that, right? Very few investors understand, you know, volume, velocity, and how all that plays into stock trading, right? With houses, the same thing happens. That house on your street, the last one that sold, is the basis for a lot of home sales in the future, right? Well, when they slow down to almost a grinding halt, that number keeps getting recorded, right? But it doesn't matter. That price does not matter if you can't sell your house. So you guys getting something from this? Type 5 if this is something that's sort of waking you guys up. Type 6 if this is totally normal, you totally get this kind of stuff. But as this price rises up, you have to realize that you can't sell in this market. So then what happens? The sellers that were all backlogging, there was one seller on the house, and all of a sudden there was, two, then there was three, then there was six, and they're all waiting a certain pre-designated amount of time. Like, you wait, your agent's like, I know it's been 30 days, no one showed up. Just wait 60. Okay, it's been 60, no one showed up. Okay, it's been 90. Finally you go, you know what, agent, I need to lower the price. And usually it's the agent telling their client this, and it's the client not wanting to sell. But what happens is, so then they start to drop their prices. And then because of lack of demand, because there's a lot of people right now that are sitting on the side going, I'm not going to buy a home. I'm going to sit back and I'm going to wait. This does not seem right to me, right? So then what happens is sellers start getting aggressive and they start dropping their home prices. The buyers on the side go, ooh, I'm seeing a bunch of home sale drops, which you should be seeing right now if you go on realtor.com. And you go, I'm going to wait a little bit. That's what's happening right now. So then you start seeing all these drops. Okay, now, before we get into this, because this is the scary point, okay? This is the danger zone, but this is what everyone in the media is talking about. All the YouTubers that are out there telling you, there's going to be a reverse crash in 2024. Yeah, okay, stand by. I'm going to get to that. Bet against me. So you see here, there have been times, like right here, and okay, right here where the arrow is, right here, you've seen the median price drop, but then it shot back up. This, I believe, is akin, this last little peak, I know it sounds crazy, is going to be akin to this. As I think we've already hit our real peak. right up here. So then we start this drop. Totally opposite of this. Now what's crazy is this bottom in the median home price came in 2009. So you could see how long it took to get us into a bottom. Now, up here, what I believe we're seeing right now is this little fake out, this little median home price, as the price of are dropping. Did I lose all sound?
It just sounds really bad. So.
Oh, it sounds really bad. My sound guy is telling me the sound sounds really bad. How's it sound now? Type 8 if it sounds better, type 9 if it's worse. We're just going off the camera. But my point being is that right now what we're seeing is all these massive drops in multi-million-dollar homes and a slight rise. We're talking a few $1,000s in the lowest end real estate all over the country that are popping up because of the FOMO. And that is raising that median sale price. All right. So this is a total fake out. Now, the Fed has said that they're going to pencil in. I want you to understand this. The Federal Reserve has never, ever lowered rates without a catastrophic fall in the economy somehow, whether it be the stock market, real estate. It's usually a combination of both because real estate is the most important thing. Real estate is what holds everything together because it is the greatest wealth feeling that people experience. Even though they're not able to actually tap into their money and go spend it wildly because they couldn't afford the payments, it's an illusion. So I hope you guys got something out of this. Things are changing. They're changing fast, but they're only changing fast for people like myself that see 5-10 years out. And for people that are looking 1 month, 3 months at a time, it's like nothing's happening. So if you want to learn the difference between a small-minded thinking that month or 2 month or 3 month and go 10 years out and start to learn why it's important to not just buy your own home. This course will fix that for you. How to save tons of money, but buy a lot of rentals and start building generational wealth. This will be like the competitive edge you wish you had right before the .com crash or right before the real estate crash, and you could have been ready to take advantage of that. If you want to take advantage of it, I'm going to put some links down below. 80% off the real estate crash course. That price is only good. And if those links don't get eaten up, those links will only be good until January 1st, because then the price goes up 10 times. I give a money back guarantee 100%. If you in 14 days haven't watched over 50% of it and you go, this isn't for me, money's in your hand. But here's the thing. I also guarantee you this. If you listen to this information, either for your next home purchase for yourself or for rentals, you will either save 10 times the cost of that course, or you will make over 100 times the cost of that course when you're buying your next property. Hope you got something out of this. The Real Estate Ninja has got to go film the rest of the course.